Now, consideration of laws and regulations in an audit of financial statements. See, let's take an example before we understand the actual standard. In fact, this example will help you in understanding faster. It is the responsibility of management to prepare financial statements. Understand properly. It is the responsibility of management to prepare financial statement. First you tell me, do you agree with this statement or not? Yeah, so it is a responsibility of the management to prepare financial statements. Now, when the management is preparing financial statements, you can just see there are so many laws which I as a management need to follow if I want to prepare financial statements. Like, say for example, for preparing financial statement, Companies Act provision should be taken into account, especially the schedule number 6, which is a part of Companies Act. If it's a listed company, the SEBI has also laid down certain norms, failing which it will be considered as an unfair trade practice, insider trading, and you'll be punished for that. Okay, so you have to follow provisions of SEBI Act. You give employees bonus, so you have to follow Bonus Act provision. Accordingly, you have to make the provision for bonus as per the provisions of Bonus Act. If you are a company which has lots of inbound and outbound transactions, you know, inbound, outbound means what? From India, remittances are made abroad, from outside money is coming inside India in your company. So there are some restrictions subject to which the remittances should be made. FEMA. So Foreign Exchange Management Act. Have you heard this name before? Yeah, Foreign Exchange Management Act. How can you prepare financial statements without following the accounting standards? So accounting standards are the core of financial statements. Okay, you have to provide provident fund to your employees when they retire. That time you have to give them provident fund money. So you have to see the employer and employee contribution should be made as per the Provident Fund Act. Income tax, how you can ignore? You have to make provision for taxation keeping in mind the requirements of the Income Tax Act plus TDS provision. There are so many examples here. Moral of the whole story is that when I'm making financial statement, I just cannot make financial statement just by following one single law. It is possible that the CA may know Companies Act and accounting standards, but it is nowhere possible that the CA may also know what is Bonus Act, FEMA. He must have left something in option also, no? Okay, in exam, he cannot study everything and go, or maybe if he's studying everything and going, he's still not having the expertise of all these laws which are applicable. So suppose if he does not know what is Provident Fund Act and Bonus Act, in that case he cannot stop his audit and ask his client, I can't understand your financial statement, sorry, bye bye. Okay, I have to answer to my client. This is it will be called as unprofessionalism if I leave my audit in between just by not knowing certain laws. So this standard is specifically made for that only. Now what this standard has to say? First you read the name. Consideration of laws and regulations in an audit of financial statements. That means when I'm doing audit of financial statement as a CA, as an auditor, I have to see to it that management has considered all the applicable laws which apply for preparing financial statements. And if the management has not applied properly one particular law, in that case, I as a CA, as the auditor of the company, I have to tell the management that, sir, if you don't follow a particular law, say for example, if you don't follow the Provident Fund Act, what could be the possible penalty to you? Okay, what could be the possible penalty to you? Remember, if there is heavy contravention of law, what do you mean by contravention? I'll write on the next page. What do you mean by contravention? Anyone? Yeah, if there is a default, or can I say it's a violation of law? Management cannot violate laws which are applicable to it. Yesterday I gave you an example of that accounting standard 12 government grants. You remember? Even a small thing like a government grant can matter much. So you cannot say that I will prepare financial statement. It's okay out of say if 7 or 8 laws apply to me, it's okay if I don't follow a particular law. It's okay. That is not the view which the management has to express. What I mean to say is that whenever financial statements are the responsibility of the management which they are preparing, they have to comply with. What do you mean by comply? Yes, comply means to follow. Okay, management has to comply with what? All the applicable laws, and there should not be any contravention or violation of laws. Or in other words, दूसरे शब्दों में, in other words, there should not be any non-compliances of law. So if there is a non-compliances of law, auditor has to observe those non-compliances and report them to the management. But what problem auditor can also face here? Auditor can also face a problem that he may not be aware of a particular law. Suppose if auditor does not knows what is bonus act. He knows everything else, but he does not knows what is bonus act. Then in that case, auditor is stuck up. There's something called as, if you don't know what is bonus act, at least you know that much, that the person who may be knowing this bonus act can be either a legal advisor. You can take help of a legal advisor or not. Is it necessary that you should know each and everything? You should know accounting standards. That you can't say that I don't know accounting standards. Then it is like एक कहावत होती है कि कटोरी में पानी डालने का और डूब मरने का उसमें चुल्लू भर पानी में डूब मरना. Because if you don't know what is bonus act, I can still understand. But if you don't know what is accounting standard, in that way you are then hopeless CA. Are you understanding this point? A CA cannot say that I don't know accounting standard. You must know what are accounting standards. So now, legal advisor, I can take help of a legal advisor or a company secretary who also knows what is bonus act, and apart from knowing the companies act, etc. Are you understanding this point? This standard has specifically envisaged that I can always take help of what? A legal advisor. Okay, हम लोग को legal advisor, we should always take the help of legal advisor wherever I don't know a particular law. If I know a particular law, I can of course follow that law. But if I don't know a particular law, then I will be always taking help of what? A legal advisor. The moral of the story is that whenever I take the help of a legal advisor, it will be easier for me to give my audit report and to express my opinion in the audit report. Are you understanding this point? So tell me one thing, what do you mean by consideration of laws and regulations? Anyone will say? What is consideration of laws and regulations? Who will consider whether management has followed all the laws and regulations? What is the responsibility of the auditor? He is supposed to go and see whether all the laws are followed or not. Achha, chalo, if laws are not followed, can I say then the auditor has to inform to the management about the penalty which can arise on account of what? On account of what? Non-compliances. Okay, suppose if the auditor is not able to analyze whether it is a non-compliance, can he take assistance of a legal advisor? Yes, you can always take help. If you don't know a particular law, that will not stop the audit work. You can of course take help of a legal advisor also. But your overall objective is to inform to the management about the non-compliances by expressing your opinion. If you observe non-compliance, if you observe non-compliance, you should ask management. See this chart properly. If an auditor observes what? Non-compliance. What is non-compliance? Not following the law. So if it is non-compliance and the answer is yes, you should immediately ask the management. Why I am using the word management? Because management is responsible. So you should ask the management to rectify the non-compliance. Have you understood this point? That means, sir, I have observed non-compliances. I have considered the laws. Okay, I have considered the laws and I have observed non-compliances. Please rectify. If the management does not rectify, management bolta nahi rectify karna hai. I don't want to rectify. Okay, according to me it's proper. I don't want to rectify. Argument. Management is raising argument with the auditor. If management does that, you can even give a qualified. You have an opinion with you. See, if there is a compliance, proper compliance, you will issue an unqualified opinion. But if the management is not ready to rectify your non-compliances, then you can always give an unqualified, you can give a qualified opinion, or sometimes you can always give a adverse opinion. Sir, why not disclaimer? Why not disclaimer? Somebody asked me this question. I am telling you, didn't you think that audit evidence I have obtained? Disclaimer is given when audit evidence is not obtained. Audit evidence I have obtained, but the problem is that this type of audit evidence is such which is going to invite heavy penalties to the management. Remember, I have written here, if there is a violation of law, it may result into what? Severe penalties also. So if it is resulting into severe penalties, you tell me one thing, don't you think that it's better to give an adverse opinion? Plus I have given you this point in SA 700 also. Everybody should spend 1 minute in reading adverse opinion. Read. SA 700 yesterday I had given. Read adverse opinion. Properly you read. हाँ देखो उधर लिखा है ना, violation of laws. That means if there is a fraud, if there is a violation of law, you should give adverse opinion. Okay, so tell me, either I will issue a qualified opinion or I will issue which opinion? But tell me why I am not giving disclaimer of opinion here. But I have obtained audit evidence. Na? you read disclaimer also. When an auditor is not able to obtain audit evidence, then he will execute a disclaimer of opinion. Have you understood? But since he is getting an evidence, but the evidence which he is getting is a negative opinion, that time he has to either give an adverse opinion or a qualified opinion. But I'll share my experience with you. See, I'll honestly tell you, I have never seen any audit report which has given an adverse opinion. Because you know what's the problem? If you give adverse opinion, definitely you're going to lose the client also, okay? Because the client will say, of course, and plus it will be spoiling the brand name of the client completely. The client can be completely going out of the market if he gives an adverse opinion, okay? Please pay attention. So if the auditor is giving an adverse opinion, he has to think properly before executing this opinion. So whenever an auditor is giving an adverse opinion, that is the last opinion which he can give. And always in exam, what you should remember, the combination will be either qualified or adverse, or the combination will be qualified or disclaimer. When disclaimer will come, I'll tell you. Now disclaimer has not yet come so far, but what has come so far? Qualified and adverse. So either you can give a qualified opinion or you can give an adverse opinion. See, what is the advantage of doing 700 first? Now if you were not knowing 700, you couldn't have understood what I am teaching you just now. Have you understood? So I told you now, I cannot do standard in the sequential order. I have to always do one which is first important than the earlier one. Have you understood? So qualified and adverse opinion an auditor has to give if the management has failed to rectify the mistake which is done by it, okay? But if the management rectifies its mistake, then of course you will issue an unqualified opinion. Have you understood this standard? So what are the main points of this standard that you have to consider? Auditor has to always see whether financial statements which are the responsibility of the management are prepared in compliance with all the applicable laws. I have given a list of examples. You know, no textbook can give you so many examples which I am giving. So always please make an attempt of writing down this example. Of course, I will be making you write, but whatever important things you observe, you should try to copy them. Make your notes very systematic. And apart from that, what did I say? That it is the non-compliance which an auditor has to identify. So if he is identifying non-compliances, then he has to go and he has to report those non-compliances. He should also report the penalties which can arise, possible penalty which can arise on account of what? Non-compliances. So tell me, if he reports the penalty and still if the management did not rectify, can he issue an adverse opinion? Of course yes. Have you understood? Right. Right. First point. Have you given the heading? Right, first point. It is the responsibility of the management. It is the responsibility of the management to identify the applicability of laws. It is the responsibility of the management to identify the applicability of laws and regulations, and follow them while preparing financial statements. Follow them while preparing financial statements. Full stop. Next point. Various laws can apply. Various laws can apply while preparing financial statements. Various laws can apply while preparing financial statements, which includes the Companies Act, the SEBI Act, Securities and Exchange Board of India, the SEBI Act, the Bonus Act, FEMA, Foreign Exchange Management Act, the Income Tax Act, comma, accounting standards, AS, accounting standards, etc. Next point, it is the responsibility of an auditor to identify whether there are any non-compliances with applicable laws. Full stop. Next point. An auditor can take assistance. That means help, assistance of legal advisors in connection with those laws which are not covered in his scope. Full stop. If an auditor, next point, if an auditor observes non-compliances, then he should communicate to the management about these non-compliances and he should also inform the penalties which may arise due to non-compliances. Full stop. Next point. It is the duty of the management to rectify its non-compliances based on the recommendations given by an auditor. Full stop. If the management, next point, if the management rectifies its mistakes due to non-compliances, then an auditor should obtain written communications from the management and express a clean audit opinion, and express a clean audit opinion. Clean audit opinion. However, if the management fails to rectify, its non-compliances, then depending on the nature of contravention, of law, and the penalties involved, an auditor may either express a qualified opinion, or an adverse opinion, based on his professional judgment. Full stop.